So I just came across this article that reads, Kathy Wood once called this Magnificent Seven company the biggest artificial intelligence AI opportunity in the world, and millionaire investor Brad Gerstner just increased his position by 276%. Hint, it's not Nvidia. Can you guess who it is? Well, if you're a viewer of this channel, you already know. It's Tesla. Now, this article came out this morning, so it's as new as they come, and I want to share with you what is discussed, because I just read the whole thing, and I think I'm a little bit more bullish, or a lot more bullish on Tesla than I even was before. Especially considering Brad Gerstner that just increased his position by 276%. Keep in mind, Brad Gerstner had about 1/3 of 1% of his entire portfolio in Tesla puts back in 2018, 2019, and 2020. You can see here the Altimeter bought 433,030 shares of Tesla during Q1, increasing its stake by 276%. Founder and CEO Brad Gerstner noted in March that he had a ChatGPT moment with Tesla's full self-driving feature, and Tesla stock is down about 30% this year. So for savvy investors, well, Tesla could be a huge opportunity. Now, in total, Altimeter Capital owns 589,700 shares of Tesla. What's interesting about this fund is they have assets under management of $6.5 billion, and they only own 17 positions. 17 stocks. Well, I guess positions. That can include like options positions, right? So they're a very concentrated portfolio. And I mean, on Wall Street standards, 17 stocks is like you're going all in on just a couple names. So the fact that they are increasing their allocation to Tesla shows how confident they are. And I think Wall Street's just behind the ball in seeing what we see and clearly what Brad Gerstner sees. Because let's face it, it's not every day or really ever for some of the bears that are short in Tesla or just bearish on Tesla get to experience full self-driving. In fact, the bears that are short or bearish on Tesla have probably never experienced FSD. So how can we expect them to understand the potential? This is going to be something that smacks Wall Street in the face like a ton of bricks. And that is obviously when full self-driving does turn into robotaxi and starts getting deployed out on the roads, which at this rate of improvement we are seeing, it's going to be in the not so distant future. Let me also remind you that August 8th is robotaxi day for Tesla. And I mean, it's so obvious, right, to a lot of us. I feel like I'm just, you know, kicking a dying horse here. But Wall Street's going to start paying a lot of attention coming on August 8th. And I believe we're going to get a target for the first incremental launch of robotaxis. Even potentially before August 8th, you could see robotaxi testing actually get underway in China. The path is basically paved to already getting robotaxis in China. Gerstner recently said, quote, "When I took a test drive in it, it was kind of a ChatGPT moment. Tesla totally scrapped their prior deterministic models and moved to an imitation learning model that really, for the first time, unlike Waymo, which is still a deterministic model, feels like a human driving the car." Gerstner added that Tesla's FSD provides it with an advantage over other autonomous driving systems due to its large user base that continuously provides Tesla with new data. He also conveyed his support for Tesla's CEO Elon Musk, characterizing a bet on Musk as a, quote, no-brainer. I don't even really care about that aspect as much. I think we all kind of agree with that. If you're watching this video, I think most of you guys probably agree with everything that is said so far. But I think it's even more interesting that this guy used to be a Tesla bear. Right? Gerstner wasn't always a Tesla bull. Back in 2017, he bet 0.16% of of his 13F portfolio on Tesla puts. That allocation increased to 0.27% by Q3 of 2018 before he completely sold out of his puts in Q4 of 2018. In a previous interview, Gerstner noted that he was bearish on Tesla in 2019 and 2020 due to bankruptcy and undercapitalization concerns. This guy, in the last couple of years, thought Tesla had a chance of going bankrupt. When you get an institutional investor or a hedge fund manager, for that instance, that is well known like a Brad Gerstner, flip-flop like that, it's because their confidence has really swayed from one side to the other. And this is someone that was actively working on his theory on Tesla, right? If you're an institutional investor, you're putting 1/3 of 1% of your portfolio into shorting a stock, you gotta always keep going back and reanalyzing why you're bearish or what you are maybe underlooking. And when you see someone go from super bearish to super bullish, calling Tesla essentially a no-brainer, some people are just not in tune with what's going on with the companies they invest in to the same degree as apparently Brad Gerstner. Now let's take a look at this article. Cathie Wood once called this Magnificent Seven company the biggest artificial intelligence AI opportunity in the world. So it says, now you might be thinking, how can a car company possibly be an AI play? The answer revolves around the moves Tesla's making in addition to its electric vehicle EV business. And guess what? Woods isn't the only one taking note. And they go on to mention Brad Gerstner increasing his position and all of the strong words that he said about Tesla recently, the ChatGPT moment. And this article just came out today at 4:17 in the morning Eastern Standard Time. So this article is from today. This article says, how can AI positively impact Tesla? Tesla's humanoid robots are called Optimus, and they are meant to be integrated into Tesla's factories. In essence, the Tesla bots would be able to work alongside human workers and be capable of performing unsafe, repetitive, or boring tasks. The implications of this should not be overlooked. Through the power of generative AI, Optimus can become smarter over time and thereby learn to complete more sophisticated tasks. For Tesla in particular, there are two primary ways to benefit from Optimus. First, considering robots can theoretically work more hours than humans, the exponential labor and productivity gains that can be achieved from humanoid bots could be massive. The idea is that Optimus will speed up the production of EVs, therefore accelerating Tesla's car sales. The more lucrative opportunity with Optimus is that Tesla could sell these bots to other businesses that are heavily reliant on human labor. Regarding autonomous driving, Tesla has a number of interesting projects in the works. For starters, Musk traveled to China a few weeks ago in hopes of making progress on the company's self-driving efforts in the region. This is important because China is a major market for Tesla. Similar to Optimus, autonomous driving carries some potentially lucrative tailwinds for Tesla, as it is a software product. Self-driving technology will carry higher margins compared to Tesla's EVs. If everything works out, this 1-2 punch should help accelerate Tesla's top line while simultaneously generating meaningful margin expansion. As a result, Tesla is looking at a massive opportunity to bolster its cash flow, which the company could use to reinvest in the business. Now, is Tesla's stock a buy right now? So far in 2024, Tesla shares have cratered 28%. During Gerstner's recent interview on CNBC, he said that he sees Tesla's advancements in AI as deeply underappreciated. I think this is a perfect summation of what's going on. On one side of the equation, Musk is moving at warp speed to push Tesla's evolution from a car business to an undeniable EV leader. On the other hand, the company doesn't have a lot to show for these investments just yet. Make no mistake about it, an investment in Tesla should not be rooted in a bullish outlook on EVs and green energy alone. Investors considering scooping up shares should be aligned with Musk's vision as it pertains to robotics and autonomous driving and AI. Given how much the stock price has dropped, I think buying shares right now is a good idea. However, investors will need to exercise patience and a long-term time horizon. While I am encouraged by Tesla's AI developments, I I also think the company is years away from achieving exponential gains from these innovations. Nevertheless, buying shares and holding them for the long run could prove to be a lucrative decision for growth investors. Now, personally, I do think this is kind of your Meta moment, where Meta in 2022 was so counted out, it became a very cheap company. Now, Tesla's not necessarily a cheap company. It would be if margins have held up, but I mean, we can make a whole video on that. Interest rates are why Tesla has had to cut prices. Now Tesla is buying down the rate on the Model Y to sell more Teslas. They're doing whatever they can. They're doing the best job possible they can to preserve margins and also continue to grow deliveries. But the way that I really look at this is one, the markets are completely 100% underappreciating Tesla's AI capabilities and what Tesla will become longer term. But I think Wall Street is also not paying any credit or attention to the fact that Tesla is likely troughing right now. What I mean by that is, right, you had margins going up and whatever, they kind of plateaued a little bit, boom, started to fall. You're at that troughing point where things are starting to get a little bit better for Tesla. Now things get much better when rates start to fall, and especially as the Cybertruck halo effect continues to be underway. It's actually funny. I haven't seen a Cybertruck out on the roads yet personally, but last night I got a call from one of my buddies that seen a Cybertruck, and it was one with like a matte black wrap. Could have been gloss. It was darker outside, but just a little side note. As people start to see the product more, I think that will start to drive a halo effect. Now, as Tesla is buying down the rate, that's great. That's better than just outright cutting prices. But when rates start to fall, Tesla, one, probably won't need to buy down the rate as much. And number two, can actually start raising prices again for their products as, you know, the Fed cuts rates and the, you know, monthly payments start to fall because of that. So you could be looking at the best margins ever for Tesla in 12 to 18 months. And Wall Street is so narrow-minded, they're worried about the next quarter. That's it. They're not worried about 12 or 18 months down the line. With other stocks, they are. With Nvidia or with, you know, Microsoft for that matter, they are. But it seems like nobody is paying attention to the next 12 to 18 months for Tesla. I'm not, well, I am, but I want to say I'm not necessarily super bullish for next quarter. I am, because we have a lot of catalysts coming up. June 13th, you have a big catalyst. June 20th or so, you have a big catalyst. July 31st is going to be a big catalyst. And August 8th is a big catalyst as well. That's 4 catalysts here in the next, 2 months or so. So I am bullish, don't get me wrong. And I think Tesla stock is going well into the 200s within the next, couple of months. But in terms of all-time highs, breaking out even to $500-600 plus per share, some real exponential gains as Tesla stock sits at $179 per share, that could come in the next 12 to 18 months. And I think that is very underappreciated by the markets. And I get it. For a lot of institutional investors, again, that are not in tune with what's going on with Tesla, that don't follow the stock like we do, it's frustrating. And I know it's frustrating for a lot of you guys because you're like, how does Wall Street not understand this? They just don't. Use that to your benefit, to your opportunity. I firmly think maybe even in the next couple of months, Tesla stock could go well into the 200s again and never go under $200 again. Imagine that. If we have no recession, if we have, no kind of catastrophe event, and Tesla does make its way to all-time highs, right? As you go higher, the stock goes higher, $500, $600, $700, $800, wherever that number is in the next 12 to 18 months. It on a percentage basis, the drawdown would have to be massive to get back to even $200 per share, right? If you go to all-time highs, call it $400 per share, which all-time highs is around 414 and some change. That would be a 50% drawdown from the highs just to get back to $200 per share. It becomes a lot less likely that you'll ever come back to these prices once you do get that exponential gain. Now, of course, could it happen? Yes. It just becomes more likely, let alone if Tesla stock hits $600 per share. Then you would have to fall, 70+% to get back to $200 per share. So it becomes a lot less likely as time goes on. And I think as time does go on, your investment in Tesla will get, I use this word tentatively in markets, safer, right? Because of that drawdown you would need to get back to these prices. In other words, you're buying Tesla at such a discounted price today. The bad news is priced in. The bad deliveries are priced in. The bad margins are priced in. The recession risk is priced into Tesla. The hybrid stealing Tesla's EV market, that risk is priced in. I don't know what is not priced in. Maybe if Elon doesn't get his comp package reinstated June 13th, maybe that's not priced in, because I think everyone believes it's going to go through, and I think it will go through, right? But I struggle to find things that are not priced in to Tesla stock already, as the stock is, in the high 170s. But there's a lot of things that are not priced into Tesla stock to the upside. That's Optimus. That's Robotaxi. That's margins improving. I mean, basically everything is not priced into Tesla. Tesla is priced as if it's going to have little to no growth this year, little to no growth next year, and then growth starts to accelerate a little bit more in 2026. You're not priced for robotaxis, literally nothing. None of the positive things we're looking at in the next 12 to 18 months. And that's why I'm specifically bullish in the next, 3 to 6 months. I think when Wall Street starts to figure out what's going on with Tesla and that we are troughing, that's usually when Wall Street likes to get back into a stock. Let me kind of point out a good example of that. Enphase earnings, 2 earnings ago, terrible, utterly just terrible. Their revenues were down 60+% year over year. But what happened? The stock went up over 10%. And they missed across the board. It was a disaster, but the stock still went up 10%. Because what happened? Wall Street started to say, this is as bad as it's going to get. It's going to get better from here. Now with Tesla, Wall Street's not quite there yet. They've started to gain a little bit more confidence that maybe the worst is behind us. But you're not there yet. That confidence level is not there yet by big money. And you can see that reflective in the short position, which is a topic for a whole nother video. That's going to create a lot of buying pressure at some point down the line for Tesla. But when Wall Street does start to realize better things are coming from here, that's when you do get some real exponential gains towards the end of this year. That's why I could see Tesla well into the 300s, potentially by the end of this year. As long as, again, there's no disaster, nothing terrible happens, and Tesla can start to do a little bit better on a delivery basis, can hold up margins. I mean, that's really all you need to do. You start to get the first couple of cuts from the Fed, economy is doing well, and you can see how expectations could shift towards maybe there's better things ahead for Tesla. I don't know. I just felt like these things needed to be said as Tesla stock is down almost 30% this year. I've had a lot of losses this year. If you're in Tesla, you've had a lot of losses this year. And you continue to see Nvidia, which has everything priced in for it, besides a 10-for-1 stock split, which caused this latest rally after earnings, just keep going higher and higher and higher. And other stocks have done that as well. Nvidia is an easy one to pick on. And it's like Tesla has seen massive improvements as well, and nobody's paying attention. That's because, again, one, Wall Street is very slow, okay, especially with a complicated subject like full self-driving. they're very slow to realize that. And they kind of have a hard time figuring out what Musk is going to do next, because he can be so unpredictable. And there's always that worry too in Wall Street's mind that Tesla is going to start, cutting prices again, not just buying down the rate, but start cutting prices again. So I really do think in the next couple of months, a lot of these concerns that Wall Street has are going to start alleviating a little bit. And when Wall Street realizes that trough is coming, that's when Tesla stock will start to do better, before you even see numbers really get better. And I think numbers are going to get a whole lot better. 2025, not to mention, just considering how low EPS is this year, how low growth is expected to be this year. 2025, you should be putting up some impressive year-over-year numbers. So for any of you guys that have a 12, 18-month time horizon, I think right now is a great time to be buying Tesla stock. But this is, again, just my opinion. Let me know what you think about this down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great Memorial Day weekend. Let me know down below in the comment section what you guys are doing for your weekends. That is it. I will see you in the next one.